With Walgreens. Now, this stock was one of the worst Dow performers last year, down 30%. The Street keeping an eye on its push into healthcare, and its earnings have beaten estimates 17 out of the past 20 quarters. Let's bring in David Katz to trade it. He's Matrix Asset Advisors Chief Investment Officer. David, it's great to have you here. Walgreens seems like the type of stock that should have done well last year. What happened?
It's an odd thing. Their earnings have come in at or better than expectations, and as you said, the vast majority of times, but they are cleaning up a lot of stuff. People had concerns about the quality of earnings, and that's been one area of the healthcare sector that did poorly last year with the drugstores. We think their earnings are going to be fine tomorrow. Again, a beat on both the earnings and the revenues, and we think the stock is pretty reasonably priced. It's a low PE, so it's a very attractively priced stock with a very good dividend. But we think that they're pretty far behind CVS in terms of converting to a healthcare company from a drugstore company.
Yeah.
So we think it's okay, but we prefer CVS.
Basically, if you like Walgreens, you're going to love CVS. That's the stock. You don't think it's too expensive or anything?
No, CVS is also at about 10.5 times, 11 times earnings.
Wow.
And it's a much better business with a better trajectory. So we think the drugstore group's going to do well, CVS the best, and Walgreens should do fine, especially after a pretty miserable 2022.
Yeah, CVS has really refreshed its look around here, so I take your point. All right, let's move along then and talk about Constellation Brands. People always say go with alcohol, it's recession-proof. The shares did relatively outperform last year, down only about 10%. So the big question, David, is whether this falls prey to general slowdowns in consumer behavior, whatnot, and its valuation. What would you do here?
So they really are a very good quality business. They've been able to grow their earnings very nicely over time. The stock is at about 20.5 times earnings, so it's a little bit above the market. However, it's a little bit below its historic averages. So if you want a good growth company, we're very comfortable with Constellation Brands. They've also beaten about 7 of the last 8 quarters. So we think there's a good chance they're going to do fine tomorrow with a good outlook. So we think it's an okay hold. We're pretty excited about a lot of areas of the market that we think are very attractive. This is just okay.
Let me ask you in general, David. So we get these 3 sort of consumery staples companies in the morning at a time when people are so anxious about earnings for 2023. And they're saying we're so anxious. It's not even about the earnings. It's about the guidance. What are these companies going to see coming? Are you worried about that kind of messaging in these reports? And then obviously once we get into the banks next week?
So we're worried about that kind of messaging as we go through earnings season. We're not so worried about that messaging in these companies. They've done pretty well. They're in areas that are fairly stable. These companies have all performed pretty well in terms of their revenues. So we're expecting okay things from them. We think the rest of the earnings season is going to be a lot more telling. We would not read too much into what the companies say tomorrow. Really, it's going to start to happen next week.
All right, so the final one is ConAgra. It was up about 13% last year. People know these brands. They've got Slim Jim. They've got Boom Chicka Pop. They've got also Orville Redenbacher's, I think. I mean, a wide variety of things here. We saw restaurant spending was up big. Maybe we thought people were trading away from supermarket brands. What would you do with the stock?
So the group has done very well last year. ConAgra also did very well last year. If you want a consumer staples company, we think it's absolutely fine. There are a lot of others in the group that have done exceptionally well that we think are fully priced that we'd be taking money from. We think their earnings and revenues and outlook are going to be fine tomorrow. So we think it's an absolutely good hold. We prefer Tyson Food in that area just because that sells under 10 times earnings. So better valuation. But again, ConAgra is absolutely fine as a hold for the next 12 months.